Bitcoin. This isn't financial advice, but if you're still saving only in cash, you're missing the biggest money shift ever. In 2010, 10,000 Bitcoin bought 2 pizzas. In 2025, that same amount is worth nearly $1 billion. Even with crashes, Bitcoin keeps trending up long-term. Cash loses value. Why? Governments print more of it, especially after the 2008 crisis and during COVID. That causes inflation, which shrinks your money's worth. Bitcoin is different. It's not controlled by any government. Only 21 million will ever exist. No one can just print more. It runs on a decentralized network, so no one can easily stop it or mess with its value. That's why more and more people see Bitcoin as digital gold for the future. Real estate. When it comes to wealth building across generations, few assets are as time-tested as real estate. From ancient civilizations to today's billionaires, owning land and property has always been one of the safest ways to protect and grow wealth. Why? Because land is limited, but population and demand keep growing. Take this real-life example. According to Bloomberg, U.S. housing prices tripled between 1992 and the early 2020, even after factoring in the 2008 housing crash. And during times of inflation, when cash loses value, real estate prices often rise, acting as a powerful hedge against currency devaluation. Unlike stocks, land doesn't go bankrupt, and unlike cash, it doesn't shrink in purchasing power. Whether it's a rental apartment, farmland, a warehouse, or a city condo, real estate produces income. The S&P 500. The S&P 500 tracks the top 500 publicly traded companies in the U.S. by market value. America's top 500 companies working for you. While your savings account sleeps, the S&P 500 is grinding 24/7, making CEOs sweat and shareholders richer. This isn't just an index, it's a front row seat to Apple, Amazon, Microsoft, Google, Tesla, and 495 other powerhouse companies that shape the world. Why it beats your bank account? Average return? 10% per year over the last century. Dividends and growth are passive compounding machines. It beats inflation, recessions, and even most professional investors. Low effort, low fees, high reward. Think of it like this. Would you rather have your money parked or running with Elon, Bezos, and Zuckerberg while also growing in value? Gold and rare metals, gold, silver, and platinum. These are not just shiny metals, they are stores of value that have stood the test of time. While currencies have failed and stock markets have crashed, gold has retained its purchasing power across centuries. The reason is simple. It is scarce, it is durable, and it cannot be printed by any government. Throughout history, people have returned to gold whenever there is a crisis. Whether it's war, hyperinflation, or economic collapse, gold always holds its ground. In fact, central banks themselves hold gold in their reserves to back their currencies and maintain economic credibility. If we look at recent trends, gold prices have consistently climbed. In the past 2 decades alone, gold has outperformed many asset classes. From under $300 an ounce in the year 2000 to over $3,000 in 2025, that's nearly a 7x return. Similarly, silver has also shown strong performance. While more volatile than gold, silver benefits from both investment demand and industrial use in electronics, solar panels, medical devices, and batteries. Platinum, too, is widely used in industrial applications, such as catalytic converters in vehicles and laboratory equipment, making it both a precious and practical metal. What makes these metals powerful in a portfolio is their role as inflation hedges. When inflation eats away the value of paper money, gold and silver tend to rise. Land. The concept of buying land and investing in land is not perceived appropriately. Most people are not knowledgeable of how the land buying process works. It goes without saying that land investment is a wise strategic move investors must make to diversify their portfolio. I will explain 6 surprising reasons to help you understand why investing in land is a good decision. It grows in value. Land usually goes up over time, especially in growing areas. And unlike buildings, land doesn't wear out. It's limited. They're not making more of it. That scarcity makes land valuable. You can earn from it, rent it out for farming, timber, oil, or build on it to make income. Low upkeep, no roof to fix, no bills to pay. It's simple to own. You're in control. Sell it, lease it, build on it, or just hold and wait. Beats inflation. When prices rise, land usually does too. But it's not perfect. Land can take time to sell, and you won't make money unless you lease or develop it. Collectibles and luxury items. While your money sleeps in the bank, some people are becoming millionaires, flipping vintage watches, rare art, and even toy cars. Sounds crazy? Not really. A Rolex Daytona Paul Newman, bought for $200 in the 1970s, sold for over $17 million. A Ferrari 250 GTO from the 60s sold for $70 million, and believe it or not, Lego sets have outperformed the stock market, some appreciating over 380% in the last decade. So why do these things grow in value? They're not just items, they're symbols. And there's a hungry market out there willing to pay more for exclusivity. And thanks to platforms like Masterworks and Rally, you don't need millions to get started. You can invest in fractional shares of fine art and rare collectibles, owning part of a Banksy, a classic car, or even a limited sneaker drop. The S&P 500. The S&P 500 tracks the top 500 publicly traded companies in the U.S. by market value. America's top 500 companies working for you. While your savings account sleeps, the S&P 500 is grinding 24/7, making CEOs sweat and shareholders richer. This isn't just an index, it's a front row seat to Apple, Amazon, Microsoft, Google, Tesla, and 495 other powerhouse companies that shape the world. Why it beats your bank account? Average return? 10% per year over the last century. Dividends and growth are passive compounding machines. It beats inflation, recessions, and even most professional investors. Low effort, low fees, high reward. Think of it like this. Would you rather have your money parked or running with Elon, Bezos, and Zuckerberg? High-yield savings accounts. High-yield savings accounts offer an unbeatable combination of a modest return on your money, easy access to your funds, and the backing of the Federal Deposit Insurance Corp, which insures deposits up to $250,000. With minimal risk of losing money, a high-yield savings account offers a safe place to store your emergency fund or cash for upcoming expenses. Depending on current interest rates, you may also earn modest returns. The interest rates offered by high-yield savings accounts can vary widely depending on market conditions, but you'll never lose money on your principal or earned interest. U.S. Treasury bills, notes, and bonds. U.S. Treasury securities are backed by the full faith and credit of the U.S. government. The market for U.S. Treasuries is one of the largest liquid government bond markets in the world, making them easy to sell if you need access to your cash before the maturity date. There is a wide variety of maturities available. Treasury bills, also referred to as T-bills, have maturities of 4, 6, 8, 13, 17, 26, and 52 weeks. They are sold at a discount to their face value, and your return is the difference between the purchase price and the value at redemption. Treasury notes come in maturities of 2, 3, 5, 7, and 10 years, while Treasury bonds have long maturities of 20 to 30 years. This means that Treasury bonds carry slightly more risk than shorter duration Treasury securities. Both bonds and notes make interest payments every 6 months. Your own business. The most powerful wealth-generating machine you'll ever own is your own business. While your money loses value in a savings account, a business creates cash flow, control, and limitless potential. Think it has to be big? It doesn't. It could be a YouTube channel, a one-product Shopify store, selling crafts on Etsy, or just the pizza shop on the corner. Jeff Bezos sold books from a garage. Sarah Blakely started Spanx with $5,000. A smart business is money that works for you, even while you sleep. While the bank gives you 1% a year, a business can return 100% or more every month if done right. Yes, there's risk, and it takes work. But if you want freedom, flexibility, and financial power, there's nothing smarter than owning something that no one can take from you.